Good day, this is Graham Bibby on the 17th of December 2014, and I'm sending you out a special Camtasia video update. And I'm sending it out today because of the unusual market action. I say unusual, seems to be the norm for this year. These things can happen in the markets. It's when external forces are affecting the psyche of the market in a negative way more than normal, and that can happen. Sometimes you get negative outside influences and the market's so powerful it just keeps continuing to rise. But I'm going to revisit a number of things I've talked to longer term Insider Club members who've been in throughout this year. And I'm going to start off with the composite index, because that's in relation to the US, where a lot of our growth stocks are. And again, I want to reiterate, I'm buying in the US because that's where I can find the greatest number of undervalued superior earnings growth stocks. And anybody invested from a few weeks ago saw how powerful those upsides can be when the general market is either flat or just creeping up. They seriously outperform. The situation we've got now is we're back raising cash because the markets turned negative. And I want to show you, first of all, the story of the beginning of the year. This is where the circle is. That's the beginning of the year. We get a short-term uptrend of a few weeks and then a downtrend. So that's a sell. Then we get an uptrend of just over 4 weeks, not long enough to lock in profits, and then a downtrend of 6 weeks. Then no trend, and then a trend started for about 5 weeks, and then a no trend. Even here, breaking below support levels. Then we broke out, and when you break out above previous highs, that historically is a bullish signal, because you've broken above previous resistance, like we did here, broke above previous resistance. So this looked good. We're stabilizing here, but then what happened? We broke down. And we broke down severely. We broke down against all sorts of support levels. There's a support level here where the arrow is. There's a support level here. You could say there's a support level around here. And it looked very dire. And then we had a V-shaped recovery. This is one-way action, as you can see here. There's virtually no room until we get to a rise of over 500 points before a correction came in, mini at that, and then we started to move higher again, which looked great. We're breaking above these highs, but here we are, we've turned over. The Nasdaq turning over first, and now it's moving lower. It's really annoying for me because I've got great stocks, but they're going to follow the general consensus of the market. Now, what seems to be happening in the market is this is the oil price. This is the United States Oil Fund. And this is June of this year when it was 40 and it fell to 20, 50% fall, and it bounced last night to 21.3. So a small fall, everybody thought was great because it's less oil, price of oil is down, gas or petrol, whichever language you like to call it. But because it's continued to fall, now people are saying that a lot of the economy relies on profits in energy companies and energy-related businesses, because oil going lower will put pressure on other prices. So I just wanted to take you through what's been going on in the markets. This is the world index, which had this big sell-off like everything else, then a V-shaped recovery, and it started breaking to new highs, and then it's fallen back. So the world index is below where it was at the beginning of the year. So that's why it's difficult. Asia ex-Japan is start of the year here, and we are below where we were at the beginning of the year, despite a sell-off in January, a rise, a sell-off, a rise, a sell-off, and a reasonable rise, and a big sell-off, rise, and a sell-off. So, it's been quite difficult. I'm sadly giving a sell signal on Apple today. We've been marginally around a sell signal for some time, but 110 being the support level, and we were straddling that to just under 109 yesterday, but straddled for the day. And you see, we try to regain on with his boxes. We tried to regain 110 last night, but we've ended on 106. I love the company, but I can't put emotion into the equation. Sorry, Apple has to go. Facebook, on the other hand, I thought we were starting to break out to the upside. It's right on the margin level of 75, so we kind of still got that. If we look, I just want to show you what's been going on in certain other markets. Here's Germany. So this was a huge sell-off. This is where we started the year, or ended last year, up here. Now we're down here. Down about 15-16%. It was all over the place at the beginning of the year. Then a significant downtrend to August. Then we tried an uptrend. Then a significant downtrend. Then it rose with everything else. It looked like the sell-off was over. And, we've come off again. On balance, I'd say that there's still potential upside in that market. This is Australia. Australia started the year where the arrow is now. And we're down here. This is the Australian ETF. So this mirrors the Australian stock market index. So it started the year sell-off, rise, looked like a new bull trend, great, sideways movement, not too much problem. That's a consolidation. Then we broke out to the upside. Should have been bullish. No, we broke back into the range, had another go at breaking out, and then a significant sell-off from September to October. Then, as everything else turned around, the rise, and then since October, we've had a significant sell-off again. The market is down somewhere in the region of 12-13% in the last 5 weeks. Not easy. I just want to take you through to somewhere else. I want to show you Singapore. Singapore started the year here and is marginally lower. Again, sell-off, quite significant, rally, sell-off, reasonable rally, sell-off, rally, and then a big sell-off beginning of September, not such a huge recovery, and then we just haven't been able to hold it. And if we look across at Hong Kong, here we are at the beginning of the year. It's down below where it was at the beginning of the year. And this is the problem. We got a downtrend lasting just over 2 weeks, an uptrend just lasting a month, a downtrend lasting 2 weeks, an uptrend lasting a month, a downtrend lasting about a month, an uptrend lasting a month, a downtrend lasting a month, and then we got a bit of an uptrend lasting 2 months, but then we got a 1.5 month downtrend, then a 1.5 month uptrend, and then a 1.5 month downtrend. These reversal in market directions in such a short space of time are the least ideal condition for my methodology to make money, because I need to get a trend like this started, and then I need to get a buy signal, and then when the market moves up again, another correction point where I can put the stop loss in order to lock in profits. And that hasn't really been happening. I know historically you can get these periods and eventually they clear to the upside or to the downside. And we shouldn't mind which one it is. If it's to the downside, obviously we're not going to make money because we're going to be on the sidelines. But if that is the start of a prolonged downtrend, no worries, because it just means at some stage we'll be able to buy in much lower. And if obviously it breaks out to the upside, you can just see from a few weeks ago, the superior earnings stock can knock on 5, 6, 8% per month. So if you get a 3-month up window, you can lock in easily 16, 20% profit. And historically, even in the normal markets, most of the profits have come in a short space of time. So to summarize, I'm saying life could have been rosier. It looked great just over a week and a half ago. I thought we were really starting to see the fruits of my labors, if you like, because I found so many undervalued stocks. But we need to be patient. I need to use protection. When oil stabilizes, I'm sure the markets will rekindle. Europe needs to stimulate the economy. So that should be good for the markets. China needs to do the same. Japan probably the same. So there's a lot of self-interest in boosting things that boost the stock market. But overall, or not overall, I am following market trends. So right now, we're back heavily in cash. I've done my 10 minutes, 20 seconds. So for now, that's my update. I've gone through world markets as opposed to more of our stock selection, so you can see this is something that's been happening across the globe. I will be back to you as soon as I have something more useful to say, but certainly within the next week. So on the 17th of December, a little bit early, but I'm wishing you a very happy festive season, fun and happiness with your loved ones, and looking forward to a prosperous 2015. Bye-bye.